which is why we're rallying.
Right.
Yeah.
Although making a pretty good yield, I imagine. What's the impetus to leave those sidelines if rates can hold these levels overall?
Well, I think one thing we have to keep in mind is there's $7 trillion of cash on the sidelines, which I think in general portfolios are overweighted and risk-free. And I don't know if it's going to be 5% 2 years from now. So I think investors, as they're planning ahead and they're seeing an economy that's resilient, I think the case for equities is still very strong right now.
Have you done any work on earnings for next year or the year after?
We're actually working on it now. Our outlook comes out December 12th.
Tom Lee, head of research at Fundstrat, discusses recent market drivers, including Nvidia's earnings and treasury actions, which have reduced uncertainties and fueled a market rally. He attributes this to significant cash reserves waiting to enter the market and highlights the strong case for equities given the economy's resilience. Lee advises investing in sectors benefiting from a dovish Fed or pro-growth policies, such as small caps, cyclicals, and cryptocurrencies like Bitcoin. He also notes that inflation expectations remain stable, though future policy risks depend on factors like tariffs and global economic trends. Despite concerns, Lee remains optimistic about market adaptability, supported by favorable policy directions and potential surprises in economic strategies.
You do write about some clearing events that we've gotten through, right?
Yes.
One is clearly best into Treasury, and then Nvidia's earnings too kind of remove some uncertainty.
Yes, and we could tell the market was sort of holding their breath on both, because once Nvidia reported, the markets began to levitate. And of course, we're seeing the market reaction today to Treasury Secretary. These are all both good events, but also showing you there's been a lot of cash on the sidelines.
Joining us right now to talk about it is Ray Wang, Constellation Research founder, chairman, and principal analyst. Hi, Ray. How are you?
Hey, good morning.
So did the decline in the stock price make sense to you? Is this just a case where Nvidia can beat expectations, but it's almost impossible to beat the highest whisper numbers on the street ever? There are just such high expectations built into the stock every time. This is not a big sell-off. It's down by less than 1%.
Becky, you're absolutely right. I think people were taking money off the table. It was more than a mic drop moment. It was a spike the ball in the end zone performance. But the problem was everyone's saying, hey, what's going on? Right? Should we take some money off the table and come back? And I think that's really what happened. I mean, these were some big numbers, right? 19.83 net income, 37.5 billion in guidance. That's huge.
Yeah, it's hard to find many flaws or faults at all with the numbers that came through. It does remind me of last quarter when they beat expectations again. The stock was down immediately after the earnings, but then it went on to grow something like 17% over the course of the last 3 months since then. You've still got a buy on this. You're looking at, I think, a $180 price target. The stock's at $144 today.
I am, and here's why. When we look at the Mag 7, they're basically growing exponentially versus the rest of the Fortune 500. So 7 stocks are basically growing really quickly, and Nvidia is basically selling to 6 of the 7 of the Mag 7, and it's a huge number. It's about 50 billion a quarter in which these Mag 7 are spending in terms of data center growth. And so that's really what's driving the majority of Nvidia's revenue in the data center side. So that growth from 3.8 billion to 30.8 billion in 2 years is huge, right? Gaming doesn't even come close. Gaming was up at 3 billion. And so what we're seeing right now is still a massive build out on data centers. That's going to happen for the next 12 to 18 months. And that's what's driving it. And then after that, we're going to see something different, which is in the sovereign AI. Countries are going to say, hey, our companies can't catch up, and we've got to invest at a country level.
Yeah, I've heard people knock Nvidia because it's really just these big companies like the Metas and the Amazons that are buying all the chips right now. But that's because they're first in line. Nobody else can get through to them. When you hear about the demand that Nvidia will discuss, Jensen Huang will discuss on the conference call, it's hard to look at the supply versus demand as a problem. It just means far more people want these chips than they can possibly produce at this point. If you were looking for a hole to poke, because most of the holes that I've heard people try and poke in this argument don't make sense to me, what's the best argument you can think of for why you might be concerned about the stock?
The only reason I'd be concerned about the stock is living in the valley. What we're seeing is a ton of people at Nvidia retire. They put in their 5 years, they put in their 10 years, they're leaving, they're cashing out, they're doing something with their lives. And it's really the talent that's going to be hard to beat given that stock run up. The other piece is really Blackwell to Rubin when it happens in 2026. The question is, same questions people are going to ask, are the chips going to be hot? Are they going to work? I think that's where people are worried about. But right now, these chips are 2.5 times faster. And of course, they cost 2x as much. And people are willing to make that bet.
There were those concerns in the last week or so about the chips overheating, the Blackwell chips overheating when put in some of these server arrays. I've read other reports that people are speculating it's already been corrected. What do you think?
From our conversations with people over there, it has been corrected. And I think the other piece that's happening is this is really complicated. Not a lot of companies have ever done this before. And I think they've tried all different possibilities and combinations. And I think they've figured out a couple solutions. And that's what we heard. And this shift is actually important because if you think about what is next, right, it's going to get even smaller and it's going to get even hotter. And as you know, the consumption and the power consumption on these chips hopefully come down, but people keep stacking more chips in one place, which is why they get really hot in the data centers.
Time for the final trade, Tim Seymour.
Another one of the reasons why I love the money center banks, but particularly Citibank, is this whole Doge concept. I mean, I think the efficiency that's going on at Citibank has been well going on for a couple of years, and I think that's a big, big driver for profitability at money center banks especially. I like Citi.
Karen?
Yes. So I'm looking at the Nvidia collar, which is what I talked about earlier. The calls are much more pumped than the puts, so I'll be putting those on tomorrow as well as today.
Did you forget for a split second your final trade?
You can
I
tell
was
us.
thinking about Citibank because I like Citibank, and then I'm like, no, okay, I won't say anything about Citibank. I'll just talk about Nvidia.
Lori Calvasina.
We'll go with the financials. It's been a long time coming, so let's enjoy this one while it lasts.
Great to have you on the desk.
Yeah.
Steve Grasso.
Is it true we're going to have Optimus in studio
He's
soon?
a trader.
Really?
I mean, at some point, yeah. I mean, I don't expect we'll have jobs.
Altimmune. This is one that got damaged from the RFK trade. I'm still in.
All right. So we'll check back with you then.
Yeah.
Meanwhile, what sectors do you favor at this point?
Well, I think the template that we think makes sense is buy things that either benefit from a dovish Fed or a Trump White House, which is small caps. Cyclicals like the financials, the regional banks and industrials, and of course crypto, especially Bitcoin and some of the proxies like MicroStrategy and Semler Scientific.
But did you hear what we were just talking about? Can the Trump administration get away with the pro-growth policies and a dovish Fed at the same time? Because some of them work against the Fed being able to cut rates.
Yeah. I mean, I'd say the market is very skeptical at the moment. That's what we're hearing from our clients. But that also means that's room for positive surprise. And I think one thing to be mindful of is the Fed can be dovish even if there's resilient growth as long as inflationary pressures and expectations remain intact. And so far, that's been the case.
Has it, though? We're seeing a little bit firmer core readings on inflation, and I guess it depends on what he does with tariffs.
Yeah, but if you look at survey expectations, whether the Federal Reserve Survey or UMich, we're seeing 5, even 6-year lows on inflation expectations. So we're back to pre-pandemic levels from what consumers see. And then if oil falls, as you know, that sort of pushes down the inflation forward curve.
On the 1-year expectations, right?
Yeah.
Fives have not been as well behaved.
That's right. And, those surveys are notoriously a little funky because if you look at the range of answers and the actual data, some people put 1,000% as the survey answer. So they can tend to skew the actual medians.
Right. Meantime, there is this school of thought that commodities are not suggesting rampant inflation or a return to a double-top CPI. You got Europe increasingly exporting disinflationary narratives, certainly China.
Yes,
right?
That's right. And I think there are many people who thought inflation would pick up because of tariffs. But as you know, it's not clear really what ends up being implemented. And if we get milder tariffs, that's actually less inflationary pressures.
Page 1 of the Times over the weekend was about companies elbowing each other to get in front of the president-elect to make their case to be carved out of tariffs.
Yes.
And then this morning, Reuters has a piece on the farm industry, again, looking to be exempted from deportationary efforts. How much policy risk do you think is going to be embedded in the next year at least?
Well, I think this is what investors are concerned about because we know that there was a campaign that was run on tariffs and deportations, but as you know, those can be very harmful to the economy. So I think that having the right cabinet picks can actually get us into sort of the right blend of sort of outcomes. And I think that's what the market's starting to price in.
Meaning you've been impressed with the picks so far.
Yes, I think not only have I been impressed, but we can tell from our client feedback that the markets really like this.
Tom Lee highlights reduced market uncertainties, with Nvidia's strong earnings and treasury actions boosting investor confidence and driving a rally. He sees opportunities in equities, especially in small caps, financials, and cryptocurrencies, supported by a resilient economy and stable inflation expectations. While acknowledging policy risks like tariffs, Lee believes they may bring positive surprises. He suggests investors focus on sectors benefiting from favorable policies and economic trends. How do you see cash reserves influencing market growth? Which sectors do you expect to benefit most from current market conditions?